What's up, my trading familia? In tonight's video lesson, I want to go over the psychological aspects that went into what was borderline a disastrous day for myself. I generally do not bet very big and I generally lose very small, and most days I don't have red days. So when I do have that outlier red day, like for instance, today I lost $20,000. That's a lot more than I normally would ever lose on a red day. It's very important for me to dissect what psychological aspects affected my trading today. Why did I lose so much more when out of 252 trading days of the year, generally most days, if there is a red day, it's not very big. And again, 20K relative to my account size, that's not massive, but it is massive relative to my consistent performance. So today's video lesson is going to be about, going over the plays that I've been trading lately, as well as what got me to dig this hole for myself that now I have to dig out of. And what you guys are going to realize is it has a combination of psychological factors. There's a lot of greed involved. And after greed, there becomes revenge. And you're going to see that within my trading. And it's not the end of the world. 20 grand is a hole for me to dig out of, but I know I can. The most annoying thing, the most frustrating thing about it is, was it necessary or was it avoidable? And in this case, you guys are going to clearly see that it was avoidable, but unfortunately sometimes, who takes the wheel of the car and drives you off cliff. And that's part of trading. It unfortunately is. We all have our own psychological detriments that are going to affect us. This is definitely one that I've seen affect me in the past. So let's go over the plays that I did well, and then we'll go over the things that I did not well, and hopefully you guys can use this video to reflect on your own psychological patterns and what causes you to either do extremely well or extremely poor, or at least bat outside your average. What makes your results no longer consistent is what I'm really trying to refer to here. So where I'm going to start is just with Huddie&Dom.com. If you guys don't know, Dom and I did release Huddie&Dom.com. It's a very basic way to get access to me and Dom weekly. We do twice a week webinars, live webinars. We do trade recaps, stuff like that. Just the basic Discord membership is the tier 1, where you get things like every now and again I do post my watch list. You get access to our chat room where we have guys like Tim Grattani, Jack Kellogg, myself, Dom, and some other 6- and 7-figure traders we've met over the years. In any case, the reason I'm pulling this up is to look at the watch list I had from last night. What I really want to focus on is cells and GME. Those are the main 2 culprits of today. Clover had a little bit of something to do with it, but we're not going to really talk about Clover. But mainly cells and GME. And without further ado, let's just get into it. So here's the chart, cells. Now, cells was this really nice multi-day breakout looking thing, where if I start with the daily chart, if this allows me to, I guess Thinkorswim. It's not going to allow me to, so let's just take it on like a more, there's another resistance that this tops out at, months ago, but for whatever reason, Thinkorswim's being weird. So this is the setup. We have a stock that gaps up and spikes, pretty much out of the blue, and for a couple days consolidates underneath the breakout level, and then, on this day yesterday, today's March 29th, so yesterday, March 28th, it broke out. And if I'm looking at a 5-day, 15-minute chart, I'm pretty much saying to myself, over under this level is the breakout, right? And so what had happened is, the stock pretty much gaps up over the breakout level, spikes out of the market open, and then pulls back. And I noticed that the volume profile wasn't too extreme. I didn't feel like a lot of people chased this breakout and got bagged. So as it started holding these lows and putting in some higher lows and started uptrending, I did start buying, towards 4, this whole $0.50 area where, the breakout's 390. So at 4, I don't feel like I'm chasing that much. And in the moment, I'm, sizing into a green-red or a low of day type risk idea. As we start, spiking more, making new highs and making higher lows, I do start adding a bit into these dips, keeping my average really near that base 4 area. And I got up to something like 15,000 shares. And the idea was, green-red was 370. The low of the day was 380. So, 15,000 shares risking 30 cents was a risk tolerance that I'm totally okay taking, 9 times out of 10. It is a bit bigger for me, but it's very controlled. And the stock spikes really well out of this area. We continue that higher low formation, we break out of the high a day, and we spike all the way to 5. And in this moment, I have no reason to sell. You know, it's decent profits. I'm up 15K at this moment, and that's definitely in the back of my mind. I know that. But it's closing so strong that I think even into weakness into close, like I still think the odds of it gapping are there. You know, now that we're in the multi-day breakout phase of the pattern. You know, and then B, given where my entry is and it closing 50 cents above my entry, I have some cushion. I feel safe swinging this. Safe is a very subjective word, especially in the stock market, because a lot of terrible things can't happen overnight. But I felt like the cushion and the setup was worthy of me swinging. And when I get to market open today and I see it gapping down to pretty much where I was thinking about risking, I pretty much just set the stop loss underneath this low, and when it tanks right out of the market open, I take the loss. And I think I lose somewhere between $3,000 and $5,000. I don't look at it. I don't really let it affect me. The $3,000 to $5,000 loss, that is not the start of my problems. This was a good trade. You know, the start of my problems, this is where it starts to compound. It's this greed aspect where it's like, I was up 15 grand. I let it unwind on me in 30 minutes, and then the next day it just gaps down to my entry, and I take the loss. So, that one just didn't work out the way that I planned it. I'm not upset with the way that I handled it. I'm just not upset with the way I handled it. But this is what starts the day, right? I'm down 5K. And I had a nice realized profit. So I let greed get in my way. Again, I'm not upset about it, but it ended up being a full-size loss, and that's just the way it happens sometimes. Whatever, I took the loss. That's fine. Live to trade another day. The next trade I have is GME, which is from today. This is a stock where, we've had a stock that's been on quite the run from pretty much 80 cents, got all the way up to 200. And we're getting into this massive bag holder area from the chart from way back when. I do think that this is heavy resistance that, as we get into 200 to 240, we have a lot of overhead, let alone, what lurks even higher at 300, right? So coming into today, I knew I wanted to short GME, and I kind of wanted to go big. I've been having a very successful March, and I did think that this stock had room to come down, especially after such a strong day yesterday. So anyways, market open happens, and I don't necessarily trade this correctly in terms of being meticulous. I was really bad at my risk aspect of this trade. Pretty much we opened up underneath yesterday's highs and we were red, and I figured, take an entry, treat it like an overextended gap down. So I took 1,500 shares at 189, and within seconds, it blew through all my risks, and I was a deer in headlights. I didn't cut the loss. I did feel like the entry was right and the timing was right, but in this moment, it was very scary because we were through all my risk parameters, and the next risk level I had in mind was 240, and with 1,500 shares, that's going to be roughly a $60,000 loss. So that's way bigger than I'd ever want to take. And that's just kind of the position I put myself immediately out of the market gate. And that's not even, that could have been the focal point of this video lesson. But on the other hand of it, I did have the right idea, and this stock did pull back. And then within 30 minutes, I was up, roughly $38,000. 1,500 shares from 188, and we got to a low of 162. So close to $40,000. And I didn't take any off. And this is, again, the greed aspect of the trade. This is like, me saying that this is the first red day, and it's gonna, bounce, and it's gonna make, pops trying to get sold into, and we're gonna close near low of day and maybe gap down the next day. This is all what I was hoping to do. In reality, with the size I was short from 190 down to 160, that was a stellar trade. Just like sells into 5, it was a stellar trade. But I took it upon myself to not take any off. And I actually got out of GME, as it started coiling, up here out of this sideways action. I took it off here for very minuscule profits relative to where I was at the lows. And this is where it all gets bad, It goes from me being greedy, between sells and GME. Had I just, taken the money when it was there, that's a $50,000 week in 2 days. But instead I overstayed my welcome on both of them, squandered both of the opportunities. And again, I'm still fine. I'm down 5 grand on sells. I'm down, what? I'm up actually, a couple $1,000 on GME. I think I netted 2 grand on it or something. So I was up a couple thousand. So, at the end of the day is not ruined, even though I had excessive size. I dodged a bullet from this afternoon squeeze. Sells, I took a full size loss. All of that included, which is there's a fine line between good trading And just that moment of decision making that puts you into, okay, this is lackluster. This isn't really going to make me a healthy income, right? But it's not disastrous. It's live to trade the next day. What happens after that is where it gets bad. And this is where you have to reflect, like what caused it. And really what caused it was being up 15 grand, being up 38 grand on GME, like having the 50K day and then feeling robbed, feeling like I deserved it. And that's what's gonna quickly shift my mental state from being too greedy to now being in this revenge mode where it's like, now I'm chasing the dream, I'm chasing the dragon. Like, you know, this could have been a 50K week. So now I wanna make 50K out of anything and anything I'm trading. And that's where everything goes to the crapper for me. And I have to really step back. You know, after I covered GME and I was frustrated, that's the moment to, you know, take a step back and say, you know, I probably shouldn't trade for the rest of the day. Let me take a break and just let the day be a loss and nothing too bad. But instead, I got revengeful and I just wanted to trade anything and everything with a lot of size so that I could make the money that I could have made this week. And this is all psychological. This is like in the moment decision making that like you don't know this is coming at you when the day starts, right? But once you're in this wormhole of emotions, like it's so important to self-reflect and like even if you make the mistake, you have to go back and make sure that you understand your mistake. And in this case, too greedy of a mentality led to, you know, me taking very lackluster results from the trades I was in. And then what came next was now I felt like I wanted to make that money. So I started stabbing into things like Clover, which, you know, Clover for me was an idea of like a reversal, right? I wanted to buy somewhere near the lows and capitalize, you know, on this seemingly good trending stock for the day. I'm trying to find my drawing tool, but I guess it doesn't matter. So I'm like Clover was an idea I had for a trade in the morning, and then all of a sudden we're in the afternoon, and I start buying it. And I don't start buying it small; I start buying it big. And of course I lose here, and I lose somewhere else, and I lose somewhere else, and all of a sudden I've lost in 3 or 4 different places, and I have big size, and I'm no longer even trading my patterns. I'm chasing my patterns around. I'm just looking for a stock that looks good on the day. I'm looking for that quick satisfaction to like make some money on the day. And that's so foolish. Like none of that matters, right? It's all just me being vengeful and wanting to get back what I never had, what I could have had if I had just hit the button. And unfortunately it led to, you know, 5 or 6 different small size positions that all lost big, and none of them were my patterns. None of them were really necessary. None of them really necessitated the size I was putting in, especially at the areas I was putting in, because again, they weren't my patterns. But the reason, and that's what this video lesson is all about, the reason I went after all this was because first, I was greedy. From the greed, I became a dream chaser. And from the dream chaser, I became vengeful. Felt like I deserved it, felt like I wanted it, and I started throwing around size that would get me it on situations that would have that I would never be in had I been the disciplined trader. Had I made that 50K and unrealized profit that I had, I probably wouldn't have been trading the close. Like I would have been fine. Like I would have felt good about my trading, and I would know that none of this really fits my pattern. But then I went out trying to force the issue, and that's where traders lose. Like it's really not that the patterns don't work, it's that the trader doesn't work with the patterns, or the trader does something stupid. And today I got humbled. And I got humbled bad. And now I feel like I want to take a break from the market. I want to step back. In reality, the trading has been fine. Like the results were there. So it really just takes a step back and saying, hey, I got to take my emotions out of the situation. I got to, you know, tighten up that latches, maybe take a day off of trading, let the market kind of pass me by and allow things to trade out. Because I do think there's opportunity prevalent right now. And the goal is not to give up. But the goal is to remaster my mind and make sure that I am focused and disciplined. And today I lost all aspects of discipline. It does not happen very often. I know exactly why. And I'll make sure to focus on those things going forward. You know, not being maybe a little bit less greedy, taking advantage of the risk reward situations. And certainly knowing when I'm in this greedy mindset of just knowing that how much money I just left on the table, to step away instead of trying to force the issue and come back even stronger on setups that are way less ideal, right? So it feels like this week has been good opportunity, but squandered on my part, and then dug myself into a hole now that I have to dig out of. And again, it's not like an undiggable hole for me, but it is an unnecessary hole. And recognizing the emotions that puts you into that hole. And again, my emotions are going to be different than your emotions, but I know that every trader goes through this. So doing some kind of self-reflection, whether it's a video lesson like I'm doing right now, to point out and being transparent, not just with the community, with yourself, as to what went wrong and where and why. And can you avoid that? And that's what's great about what happened today. Like this 20K loss that I have is totally avoidable. Like none of it was necessary. So it's just about, again, it really comes back down to a discipline thing. So what I'm going to start doing is, being more disciplined, making sure that I'm doing the things in my day-to-day activities that result in discipline. That does mean going to the gym. That means making green drinks. That means getting up at a certain hour, making the bed, doing all those things that make you feel productive, making sure the house is clean, focusing on the stuff that matters, socially, family. Working on my house is always a thing. But again, just being disciplined, being as productive as I can, cooking my own meals, like just making sure that I, again, tighten up the latches for myself personally, the discipline aspect, and that translates into trading. And again, the trading is fine. Let's just focus on the A+ patterns, and then when you have the move, when the op is there, when the trading is active, take the move and don't put myself into these consolidation phases that I have to sit through, grind, get in my head about what could have been, and then go out and search for that dream. And that last 5 minutes is literally the whole concept of this video lesson. Whatever it is for you, I hope it helps. That's it for me, guys. Good night.